Welcome to the Smart Money Show, where smart thinking meets smart investing. I'm your host, Lydia, and each week we bring you powerful insights, real strategies, and bold conversations that help you grow your money, expand your business, and build wealth with purpose. Whether you're a seasoned investor, a rising entrepreneur, or just trying to figure out where to put your next dollars, this is your money map. Let's dive into today's episode, the Smart Money Show, because your money should be working smarter just as hard as you are. So today we have Mr. Luis Castillo, who came to the US as an immigrant, no money, no family, started working in a warehouse of a minimum wage, worked at night as realtor and then mortgage broker, closing 30 deals per month, and later transitioned into international financing. He always kept real estate in mind and invested early 2000 in single family. Mr. Luis Castillo has been recognized as an advisory council member at the United States government twice in 2001 and 2023. So, Mr. Castillo, thank you for being part of the Smart Money Show today. We have a few questions from some of our viewers, and would love to have great answers and great insight from you. So welcome, Mr. Luis Castillo.
Thank you for having me, Lydia. You guys have a
Yeah,
great show, and I'm so happy to be here.
thank you. I'm also excited to have you here. So here is a few questions. So, Luis, can you take us back to what it looks like landing to the US without no money, no family, no support? How was the experience like for you?
Well, when I came to the United States, I had something in mind. We have
Okay.
a problem in my country that has to do with war, but I'm happy enough that I was in love at
Mm,
that time. So when you in life has something that you're in love, and
mhm,
any adversity doesn't really matter because you
mhm.
focus on what you're looking for. Who cares what's wrong could be around you? So at that
Yeah.
time, I was still in love with my high school sweetheart, my wife today, being married more
Oh,
than 40 with her 45 years. So at that time, I was coming out of high school, came to the United States.
okay.
So I tell you the truth, and even in my book, I mentioned that my mother used to tell me that I got something from God like her, which is I
Okay.
forget things very easy. So when you forget
Okay.
things very easy, you forget the bad thing that people does to you. So sometimes I have to go to
Yes.
her to ask her, hey, do you remember what this
Mhm.
person did to me? So I think it didn't affect me much until like
Okay.
5, 10 years ago, somebody told me, you should tell your story, you should tell your story. In reality,
Wow.
when you have something focused in your mind and it's something that is bigger than you,
Mhm.
anything you can have a rhino skin, anything can
Mhm.
be against you. But if you focus and you love something and your why is so big, who cares what is everything happening around you? So really, I don't feel like anything bad happened to me. I mean, it was a great experience coming from nothing, and it just
Wow.
keep growing up, growing up, growing up. Right? I see that one my first house was behind a trailer park on a trailer,
Okay.
a little room,
Okay.
and then after that I got a townhouse, and after that I got a 3 bedroom home, and after that I got a 4 or 5 bedroom house, and after that I got something huge, and they become
Mhm.
going up, going up. So yes, matter of yes, focus on what you want in life, something bigger than you. That will be the answer.
Wow. That's beautiful. So it's more like seeing the advantage in a disadvantage and
Yeah.
knowing your why is key. So from how did you transition from warehouse floor to closing 30 mortgage deals a month? What was the inner mindset that powered that journey
I
for
kept the
you?
United States like anybody else saying, "Oh wow, United States is the dream of the whole thing." So I yes, start working. So they told me, "Look, can you drive a truck?" I said, "Yes." When I got in the truck, I didn't know how to drive. I thought it was a
Wow.
car. But then they said, "Get out, throw some boxes." So I started throwing boxes, and then I became a warehouse manager. but then on the handling like a 200 people. But then I saw a ceiling that not you cannot keep going up because that's it, that's your end. So I said it cannot be a ceiling on me. I gotta get something else. So I start working at night, and I say, what can I work at night that is gonna it's gonna go along with working during the day? Realtors, they show properties at night. They don't show it during the day. I mean,
Wow.
like afternoon. So it's a perfect. So I got the real estate license, and I start showing at night. And then I said, look, if I make a commission of real estate, how can I get from the same client another commission? So I said, why don't I take the mortgage license? So I took the mortgage license too. So anytime I got a closing, guess what? I got double commission. So that's when I start growing. And
Wow.
then I start getting it got to a point that I was making more money than my job. I say bye. So
Okay.
I just say bye. I continue working with my mortgage and also my real estate. But then after that, something came out in my mind. I said, look, I'm working hard, but where's the residual
Okay.
income people talk about real estate? There's no residual income. I'm still working every day. So I said, you know what? Let me try to invest. I think I bought a house, another house. I got it for rent. I got like four houses at one time. But then I said, but this is another part-time job. I have to worry about the tenant. I have to clean up the whole thing. I said that doesn't work. So I always kept looking for something else, something big. And then that's when I found something with the U.S. government. And he said, look, you can close business of 80 million, 100 million, all that. And then I said, you know what? Let me get into that business. So right away I started learning that. And then I was making more money than my other job, which is now the real estate and mortgage. So when I started making more money in my other new venture, and I said, let that go and let's focus on this one. Become an expert in real estate and mortgage. Now let's become an expert at this and use my experience. And after that, it became, during 2006, 2000, I got involved in a Brazil um, real estate. A friend of mine, I always kept buying stuff in real estate. And a friend of mine told me, let's invest. So we started investing in land development, 2006, 2005, and
Okay.
4. We did a lot of flipping of lots in North Carolina. After that, we got involved on a real estate in Brazil. The crash came in, the 2008. We all suffer out of that. So we have to I have to negotiate with my partners. They said, you don't speak Portuguese. I do. You don't know the country. I know the country. So we all change shares. And they say, okay, you got yours here, I got mine here. So everybody run away with their own property. So there were no more partnerships. So I have to
Wow.
get rid of my Brazil property. I came out good. And the good thing is that because the currency, I got 3 times of my investment. So that was pretty good. So after that, I said, look, oh my God, real estate, I got such a bad, after 2008, it's only a few that they went ahead, but many of us, we got a big hit. So after that, I said, well, we're going to take a break with real estate. So that's when I start growing my other business. And then 2019, the pandemic comes, and I said, look, I got to do something else. And when I say I got to do something else, I said, I want to go back to real estate, but I don't want to go into housing, into something small. Let me look for the big stuff. And that's when I started with the multifamily and also syndication. So it was always the process, wanted more, not to be satisfied, yes, to want it. And like many people that get something wrong with Warren Buffett said about have different venues of income. Yes, it's right. However, you don't want to be putting all your effort in different basket. Effort and the
Yeah.
income in different basket, not the effort. Many people they just go work in this one, work in that one, but the income is not coming. You have to you have to be an expert in one area. Once you dominate that industry, now start giving you residual income, then you take the next one. And that's what I did. So keep doing that. So and now working on different things, learning something else. Always be hungry.
Okay. All right. So Mr. Michael is asking, so you mentioned the 2008 crash. So the 2008 crash shook many investors. What was your biggest personal loss during that
What
period?
is my biggest loss?
Yes, during that
I
period.
got a beautiful house, $2.6 million. And it was in that
Wow.
time. Today it could be like a 6, 7 million. I don't know how much would it be. but it was more than 7,000 square feet. So it was a huge house. So I have to let it go. I mean, I have to let it go because it didn't make sense. It went upside down like a half. So I was losing half. So I have to let it go. Something that I learned also before 2008 with the Brazil, that my bigger lesson there, big loss. Well, I got money out of the Brazil, but I feel bad because I sold. It was a castle. You put Castelo Barão do Itaipava, that's a castle in Brazil that I used to own. But sometimes what I learned out of those two losses, one of them I didn't lose. I mean, I had to sell it. But the other one, yes, I lost the property. And is that never get in love with what you invest. Always get in love with the
Okay.
numbers.
Mm.
Yeah, so that was one of the bigger losses. Something from my heart because I like it, but yeah, but everything else, it were like um, some lands in North Carolina, like maybe half a million or something like that, a couple of $millions, yeah. But that was my biggest loss.
So if you are enjoying the gem and you are dropping, just do the smart thing, click the smart button, subscribe to this channel, and you will not miss any moment. So, Mr. Lewis, we noticed. Sorry, just a minute. I'm picking up a question from one of our guests. So, so we noticed you are into underwriting real estate from what you said. And he's asking what exactly is underwriting in real estate and why does it matter so much?
Yeah, I
In
think if you like to read books, underwriting is about a couple of things. First, trying to read the path where that property is going, trying to predict the future. That's underwriting. So you want to see the fixed and the variable expenses. You want to see all the value add
okay.
that you can come up with that is acceptable in that area. But the second part besides that is that you have it's like a book. Somebody can sell you a property for $10 million, but you read a book, and at the end of the book you find out, like Agatha Christie, you find out that who killed that person. You found the person. Good. Now you're happy. You finish the book. Something is underwriting. You have to find out what the number is, what the price is. Many times I receive properties that they don't have no price. They say is yes, just give me the rent roll on the T12. I don't care how much they're asking for. My number is my numbers. So if you underwrite property without knowing how much they're selling for, I would say it's the best because it's your number. That way you don't get automatically like in your mind, yeah, it's $10 million. I gotta get close to the $10 million. You're lying to yourself. So underwriting is about knowing the path of progress of whatever you're investing in. And of course, if we go into an underwriting Excel sheet and all that, it takes a lot of details. What it takes, but in summary, that's what it is.
Okay, so Mr. David is asking, what is the common mistake people make when doing due diligence on multifamily deals?
A word that changed from one person to another one. Assumption. Remember, I said when you get in
Mm,
love with the property, you start assuming so many things that you to make the property force to work. So it's to avoid that, always to have a devil advocate, another person to be against you. So the way that we did it on properties, I
okay.
had a partner and I do the underwriting, I do the due diligence, and then I show it to the partner. Hey, here you go. Tell me why I should not buy this. And that the assumption that you do is what it is. Remember, we're not talking about single family home here. Single family home is a
Mhm,
lot more simpler. We're talking like 100 unit, I would say 50 unit to 200 units. That's what I'm talking about, multifamilies. So there is a
mhm,
lot to assume that what's going to happen with the property. So you got to be very conservative. I would say the bigger mistake, people get in love with the property and the assumption they're way ahead. Yes, now we put an offer at 94 units in South Carolina. They were asking, if I recall, $9.5 million. At the beginning, we thought that we were assuming that we're gonna, hey, all this property in the area, they're like a going like a B plus units, and this one is a B minus. So why don't we convert that into a B plus by adding a backyard? So we can enclose the backyard, and then by bringing that, we can have an extra rent like $150. So that's a value add. But guess what? We then learn that we cannot add it because there's some reason why we cannot add the backyard. So once we couldn't add the backyard, now our prices that we offering went from 9.5 all the way to 7.8. So we didn't get the deal because if we would be assumed without knowing the fact that we can do or not that value add, then we get it. It would be a big mistake because then we cannot enhance the property.
All right, David. So assumption is bad. So you don't assume. So the next question would be, could you walk us through your underwriting checklist for evaluating a 100-unit property?
Well, first of all, what you do is that once you get the T12 at the rent roll, I mean, of course, I don't want to do the whole detail. It's going to be like a summary because it would be the whole day. But first of all, when you get the
Yeah.
T12 at the rent roll, and you want to see the life of the property, how it's behaving during the last 12 months.
Mhm.
Keep in mind, we ask for T12 because every month goes with the units, go with the different expenses every month. So you see what is going down, what is going down. So you want to know the story about the property. What happened in this month? What happened the other month? Understand the story. And then after that, they create questions for the broker and create how can you bring a value add? What can I do to the property? Normally, we're looking for a property that normally they have a cycle. There's a cycle. There's a cycle every
Mhm.
5 or 7 years. People they buy and sell property because after 5, 7, 6, 7 years, then the property is not the same when you bought it year one. So you might want to implement something better for the property, change the kitchen, or just put a different new refrigerator, new oven, and all that. So all those little things that give you a reason to bring the value. Also, you want to see what's going on outside the property. Do they charging for parking space? Does the property the way that is set up maybe it's too long, and those tenants they want to bring they want to have a resort parking, so you can add like a $20 extra. $20 extra on a 200 unit, that's a huge increase. So it's only $20. And then you want to see if you want to place internet into all the unit. Well, at the same time, you have to find out how much the internet they're charging in the area. Maybe they're charging $70, $80. What about if you put one of those antennas that you can cover a larger space, and now you can divide it, you can charge 35, maybe it costs you like a $30. Now you can charge it 45, $50. Now you have a value out of $20. So you at the beginning, you put all the information in your Excel sheet, you get all your income, all your expenses, and then you run it, and then you see your outcome. What is the average annual return, what the internal rate of return, and what is the cash on cash, which is what you're going to get it every year. So you know that might be low at the moment because you're not doing nothing to the property. But now you bring all your value add into it, and now you start, okay, let me confirm the value add can be done there. And then you start adding little by little, and then you see the performance of the property going up, up, up until you say, that's it, that's all I can do. Because remember that you cannot add parking spaces or charge for parking spaces. Is the area where the property is, it is charging parking spaces. Now, if all the units, they say all the units they have a washer and dryer on a specific spot that everybody go put the coin. Now your value add, it could be that you can, if you have room in your property, you can add your washer and dryer inside the room. Now that's a value add because they don't have to wash the clothes on a specific room. So you start adding those, but you're confirming that whatever you can do, it is acceptable by the neighborhood of the property. So, and that's the way that you bring it up.
So, how about the assessing risks in multifamily deals across different states, maybe like Texas and Nevada? Are they different, and what would you say you would basically do to
Def-
assess those risks?
Definitely, they're all different. I would say like in 2020, 2021, people they were moving from New York and California into Texas, some part North Carolina, and also Florida and Arizona. So all the 2 years later, it came out on the news. So they said that once something comes out on the news, you're too late for the party. You can go to places very simple like a U-Haul. You can go into U-Haul and see the one way U-Haul where they're going. I mean, you can do all those statistics. You can contact the labor department how many new applications you have for jobs. Keep in mind that your investment multifamily goes with jobs. Wherever the jobs are being created, that's where you're gonna go. So so every state is different and it's moving. You have used to look where the path of progress. So right now, places that I'm looking for is Georgia, South Carolina, North Carolina. I'm not too crazy about Texas or Arizona. A lot of people already got in. So you see a lot of rents coming down. So where they're gonna go the next flow? I mean, that's why you have to look. Florida, for example, I try not to invest in Florida because you want day one to be positive cash flow. Florida is very hard to find property positive cash flow day one. We wanted to have like a 3-4% minimum so you can add it every year. So yes, every state change. Also, you have something in consideration. Keep in mind when you're gonna turn your property in 5 years, let's say 5 years, make it simple, it could be 7. You have 5 years. So you want to change, you want to increase the rent of those tenants with a reason, with a value add, right? But what's going to happen is you cannot change everything in 1 year because everybody will leave. So first of all, you have to take in consideration that year one is going to be a curve that is going to come down the occupancy. You have to take that in consideration. Don't think that when you take in the property, everything's going to be beautiful going up. Not necessarily. On the contrary, it's going to come down because those you're going to put pressure on the rent. So you're planning like a 30% of the tenants because they have contract. You cannot change them. So the 30%, you're going to change them and increase the rent. Many of those going to leave. Next year, you do another 30%. Many of those going to leave, and then you're going to have vacancy. And the next year too, or maybe you plan of action is going to take 4 years. So you do 25% every year or something like that. What happened in some states that you cannot evict someone in 30 to 60 days, like California, some other state. Go find out. You can go in ChatGPT, you can go in Google and ask, how long does it take to evict someone in this county? And it's going to tell you 6 months. Now, remember what I said? How can you change in 6 months? You cannot evict. So your plan of business plan will not work because 30%, 30%, 30%. Now it's not 30%. Now it's going to be like a 5-10% because it takes you 6 months, and now you have to take in consideration 6 months of vacant, or at least people that they don't pay because you're already in the eviction process. So you got to be careful what state you're gonna go. Do they have opportunity in California or those places? Yes, but you have to know the market. You might want to know the legal aspect. Have a good way team. Have to have your business plan. For us, that we go to other places and we don't want to get into that deal, so you better don't even go to those states where they're taking someone or evict someone take too long. So it is a big difference. There is no someone that they call them blue state, red state, because the political reason, the other one, but what we call them, yes, it just depends. Because for example, Chicago, there is a, I don't want to mention exactly the city, but we put an offer, but on that city in Chicago, the eviction is pretty quick. But when you go to Detroit, the eviction take too long. So really you go by county. But be careful also when you have somebody that's by county, you want to see the history of the strong governor, the strong mayor in that area. How's been the history in the past of that? The same thing you do with taxes. They say so. It is a lot analysis that we have to go through that when we go through the due diligence. But yeah, a state will change completely.
Okay, so you mentioned something about interest rates fluctuating. So how should investors stress test their numbers today, 2025, and maybe in years to come? How should they stress test their numbers?
You
With
mean
the
on
interest
insurance?
rate fluctuating.
You say on insurance, you said?
No, 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 no. You talked about interest rate fluctuating.
The interest rate, yeah,
Yes. So
the
how
interest
should investors?
we always underwrite it like a half a point above, because you never
Okay.
know. You always do in the LOI, you put a gap in your
Okay.
LOI because you never know any change. I mean, these years sort of a little uncertain because a lot of big changes happen. So when
Mhm.
there's big changes like this one happen, there's always opportunity. So even the uh, even the government, they don't know where the rate is going. So really, you have used to, you wanna be safe. You know what the rate's gonna be in weeks. So the only thing that I cannot tell you what the rate's gonna go. It's impossible for me. Even I'm not an expert, and I don't think even the treasury knows. You saw it didn't want it to lower down, but the president wanted to lower down, but he doesn't want it to lower. So they're like at there. Even themselves, they're kind of debating on that. Me, even less, of course. So I would say that to avoid that, look at the rate what is today. You underwrite with half a point higher, and when you put the LOI, you want to put a cap. So if its rate goes up, then you can get out and get your deposit. That's the only thing I can tell you on the rate. But the rate is kind of difficult to predict right now. Now we expecting that's gonna come down, but that we don't. I would say right now, whoever's gonna predict it, I don't think it's gonna. I don't know if it's gonna be there. If it's gonna be close to real.
All right. Mr. Lewis, what does smart money means to you, and how would you put it in the context of real estate and beyond? Personally, what does smart money means to you, and in context of real estate, what does smart money also mean to you?
You you have to know when to invest, when take your time, um, when to take a break, because also in real estate you have different assets. Like for
Okay.
example, myself. Right now, I see multifamily. Well, you saw what happened with the offices being vacant, and now the offices they're converting into multifamily. So whoever start Sam Sell, which is well known, is a multi-billionaire. He sold his portfolio, which is that was the biggest portfolio he sold at that time, about $37 billion, I think, something like that. But they were mostly offices. But he sold it at the right time. A few years later, all those offices they were becoming vacant. So if you can predict the future, you will win. Or what you have to do once you expert in one area, let's say I'm I know how to underwrite multifamily. My coach, when I took the coach, he told me that I'm pretty good at it. So we have a few property. So and all that. So once you know that you measure by result is there, now you might want to say, you know what? Let me go to another type of real estate, and at the same time, going to learn, going to learn from the best. So I'm considering right now, because the way the market is, I'm considering the RV resort destination, like a vacation destination, no RV park. Why do I want to see those? I'm learning a lot out of those. I did I did a due diligence. I also went to see different properties and all the uh, Georgia, South Carolina, North Carolina is beginning of this year. And because they're less, I mean, there's more you can do. You can expand, more manageable. And normally they're a like a $6 million to $2 million. So it's more manageable to be there. So you want to consider that if it's not the right time, you have to be honest and don't get desperate. That's what I say at the smart money about real estate. Do not get in love with the property. Get in love with the number. I would say.
Okay. Thank you, Mr. Lewis. So, Ryan wants to know, what's the biggest myth about multifamily real estate you would like to debunk today?
What is the biggest? What you said? I'm sorry.
What's the biggest myth you would like to debunk?
Oh, that all real estate is good in every area. Everybody think that real estate is real estate and it's gonna be as good as anywhere. Especially now, imagine it's about $10 trillion they bring into United States for investment. And as of 2 weeks ago, since the new administration took place, is 134 new SBA loan they have done to manufacturing company. So job moves from one place to another one. You got to look for emerging market. People believe because it's real estate is good, not necessarily. Real estate is good if you hold it for 10, 20 years, but you're going to hold it for 10, 20 years? Maybe not. And some cities, they're very depressed and they go down completely. So I would say that's a bigger myth. People believe as real estate good, as long as you buy real estate, any real estate is good. No, absolutely not. You want to go in emerging market. Always, otherwise, it's better just put the money in the bank and get 4 or 5%.
Yeah. Okay. So I show if someone has $100,000 and is looking to enter the multifamily space, what's your first piece of advice you would give to the person?
There is a way of mitigating risk, and it's diversification. Especially if you don't know exactly what you're doing, the most you can do is diversify yourself. And there is the properties that they're this large, and there are many that they offer that they're done by syndication. So that's mean that you have a $10 million property, $3 million is coming from investor, and possible 2.5 or 2 million is going to come from passive investors. So if you're a passive investor, so you might want to put $50,000 in South Carolina with a property that you did as much as you can underwriting. You can put another $50,000 in another one, 50,000 in another one, 50,000 in another one. It's like I'm not having everything in one basket. And of course, you want to see the the ethic of the people who managing that property. You want to see that the people that they managing those property, they have went through a crash in the past. Many of them, they're newbie. They might learn a lot, they might know a lot this day, but it's not. But you don't learn the same when you're under pressure and what to do next and how to manage and be relaxed and still managing. I have people that I know that they're on the management, they're super nervous and you can see them in their face. And you don't want to be next to those people because that's go along with you. So diversify and get some kind of idea um, about a little bit about underwriting. Just get an idea because you can put, I would say that the website and the paper can hold everything you want, but you have to be honest to what it is exactly according to the statistic and also the what you can see in the real life. So diversification will be straight answer.
All right. So, what's the favorite market to invest in today and why?
Like I said before, I'm looking into Georgia, South Carolina, North Carolina, and
Okay.
I think it's because the immigration from that went to Texas and Arizona, it didn't go to Georgia, South Carolina. So I would say those. There's some other places like Alabama, Kentucky. There you have to change every quarter or change every 6 months. So you gotta be careful and go into the labor department and use a phone call and look at how the rent is being in the last 6 months and how's the rent today. Is it increasing? Is it going down? So very simple. You can just measure it.
All right. So, what's one book that's changed your life? This is from someone who is more interested in getting to know what exactly it is. So, what's one book that changed your life, and tell us what it taught you?
I think read 100 books from or 50 books from people that have been success. There is no one book that's going to help you in that. But I think if you read at least 50 books, it will change your life. Um, Look at biography of current people that are still alive, like the founder of Blackstone, Sam Zell. I mean, all those people. I mean, the Virgin Atlantic. I mean, I'm sure yes, the places, the founder, all those. You can just look into that, and Maxwell is a good writer. Robert Greene. I mean, so many. You can just go over it. Read at least 50. Don't read one or two or three, and that will change your life. And I think I was in an industry that I got in just because I wanted to be trained, because I knew that in the industry was a good training. So those people, they were pushing me, and they were always asking me, "What book are you reading today?" Every week, "What book are you reading today?" And then I got the habit to reading books. Yeah. So I think that something will change your life, and I think that's something. There's so many things. There's no one thing that change your life. There's so many things that change your life, obviously, and that's where we are the different personalities, and you are different. Your personality might change according to different um, aspect or things that happen in your life. But I would say that that was a big change.
Okay. So, what's next for you in 2025? Any major project or goal aside the investment?
I'm growing my team because the real estate is kind of uncertain and you got to be careful. So I do have another business. So I'm growing the team there. Right now we're doing an event that's going to be trade finance and real estate investment. It's going to be a huge event here in Miami. That's going to be August 28th. We also back to do seminars outside United States. We're going to be in El Salvador August 21st. We're working on a possible another going in the area of Turkey and all that area to do some other seminars. So I always say that there is a book that called Miracle Morning, and it says that you gotta do, you gotta stop doing something if it doesn't apply to these two things that you have to do, either making money or you like it. So if the two of them doesn't apply, stop doing it. So if it makes money, continue if you don't like it. But if you like it and it doesn't make money, continue. So I'm to my stage of my life that putting more priority. Do I like what I'm doing? So and that's where I am now. Um, Everything that I do it has to like it. So that's my step. I mean, those are my next step. And just being cautious with real estate right now. And yes, remember I said the RV resort that I'm hoping to have one property ready before the end of the year. That's what I'm looking for.
Okay, so Mr. Lewis, you mentioned earlier that you're an author. So can you tell us about your book and what motivated you to write in? You said you wanted to share your story, but what is the deepest secret that you want people to know that made you write out the book? And just tell us a brief about your book.
Yeah, uh, 70, 70 is a Bible number. And when Jesus said that forget forget him, but do not forget him 70 times
Mm.
7. So it's like an infinite number, and when you understand. So I call them the 70 lesson, when reality is more lesson. I'm not trying to say I'm the one who applying those lesson. I'm not putting myself there. Lesson that I learned during different time in my life. In reality, that book I started writing, it was close to 2016, 17. I put it on a book, but I didn't publish it because I didn't like it. So I hold it, and then I continue after COVID. So it's been taking a while to write that. And the original reason I wrote the book is because a teamwork uh, involvement, and I had a team. I wanted to have a team in Latin America, and so I wanted to write. Hey, if I have a team, why do I want to teach them? So the book is a lot about teamwork and how can I get out of the W-2? How can I get and become entrepreneur? What are the different techniques? Because many people they give you the mindset, but they don't give you the techniques. That's the part that what I'm doing in that book. And for example, personalities, huge important personalities. And Socrates had the different personality. Many people they call them by this, which is dominance, influence, steadiness, and consciousness. In my book, it says the colors: the red, the green, the yellow, and the blue. And the reason you wanna know the personality of a person is because how you gonna approach them. So you have so many pages on that chapter, and I think that's the most important chapter. And I learned that from a mentor, so I put it in writing because nobody has it in writing on such a detail. And by a shake of a hand, you can identify that person if it's either red and blue or yellow and green. Now you know it's yellow and green. Okay, let me identify which one it is. You always has a predominant color or predominant personality, and you have a second one. So when you deal with someone, you know how to act. Also, when you go to certain industry, the majority is going to be certain personality. So you got to go with what they're looking for. So you have the functional personality and you have the dysfunctional personality. That's for you to look at the mirror. Am I being dysfunctional? Am I being functional by my own personality? So there's so many things that you can do with the personality in business and family. My daughter, it was always crashing with her. Um, it was many years ago that I started reading that my daughter is a blue person. So at that moment, I realized I had to treat them as a blue person. You cannot jump into a blue person. They can jump on you, but you cannot jump on them. So you have to react in a certain way. That's objection, different objection. How do they get you? There's so many lessons in the book. So really, it's about teamwork. Now working on a second one, but the second one is going to be more like a technical about my other job, which is only 40 companies we allowed to have that title in the United States government. But that will be by the next year. But this one is going to be more like you're going to be entrepreneur. You have certain techniques. That's what the book is all about.
Okay, so guys, the link of the book is on the show. So kindly scan and also so Mr. Lewis, where can our audience connect with you and learn more about your investment? Where can they connect with you and also learn about your investment?
Where you said?
Where can our audience connect with you and also learn about
Oh,
your
I,
investment?
all my social media are Mr. Castillo
Okay.
Luis, all of them, Facebook, LinkedIn, believe it or not, I have some on TikTok, Instagram. Um, so they can contact me there. And also, my email is a little longer, El Castillo Royal Estate Investment Group, but you can contact them there. We do have meeting with certain people that they want to learn. Groups in WhatsApp that we keep in touch. If you want to learn, I can guide you to go to some of the groups, not necessarily from mine, but I can tell you where to go. I'm not a coach or anything like this. I don't want it to be, but I can guide you where do they teach that, where did I learn, where are you gonna go, so I can guide you just for the path,
Okay.
where to the right path to go there, because many people they're not
Mhm.
real. They just trying to sell you
Mm.
something, and be careful with that.
All right. So our guest watching you, um, what's the final smart money takeaway for immigrants or first time investors?
Learn, learn where you want to invest. So if you want to go in the stock market, learn. I mean, I said it in the book also that when you go for a coaching, this is a mistake they do. When you go for a coaching, learning about real estate like I did for a whole year, because I read financial statement, uh, balance sheet, profit and loss, international and also domestic, and and also I have a study economy, and I have a business, a lot of things. But when it went to real estate coaching, you have to go with the humble way that you're ignorant. So I took a whole year, and everything that I learned there, it was not the same of what I know. So I have to go back to basic. And the mistake that most of the people do, I give you on the real estate example. You have a 1 year coaching, and the people fail the coaching that they leave before they spend money and they don't get out is because one simple reason: they have their goals
Mm-hmm.
wrong. The goal when you take a coaching is to learn, not to find the
Mm-hmm.
property. What people do, they only go to coaching for 2 months, and they say, now I start looking for
Mm-hmm.
property. You don't know. You don't have to look for the property. I mean, you're just learning. Once you get the blessing from your coach, and once you go for the whole year, then you look for the property. So your goal number one is to learn. Once you accomplish that one, then you look for the property. Even the coach tells you something smart, which is when you start looking for property while you're learning, you go speak with brokers or you underwrite property that they're not in your market. So you don't have the mentality that you want to buy that property. Your goal is not to buy the property. Your goal is to learn how to underwrite. You see, so my advice, learn whatever you're gonna do because paper can hold anything. I had experience that I said, look, because there is a cap rate, they call them. But cap rate in and cap rate out. If you do run the cap rate out, your whole deal is gonna fall apart. So how can you predict the cap rate out? I mean, you have to do a lot of due diligence. You have to learn that. So one little mistake can kill the deal, and you have to learn and put it in practice. So learn will be my first advice. Whatever you're gonna invest, yeah, and don't accept that everything is. There is no guarantee
Mm-hmm.
in investment.
Such a powerful insight. Thank you, Mr. Lewis. Thank you for being part of the show today. I'm sure that viewers have learned a lot, and those who wants to connect with you have gotten down, they've penned down the sites and where they can get you. Thank you very much for partnering with us and for being on our show today because we learned a lot. And I would personally still go back to this and rewatch it again because it's a whole lot that we need to download here. Thank you very much, Mr. Lewis. Um, is there anything else you want to
Thank you
say?
very much.
You're welcome.
No, thank you very much, Lydia. You're a giver, so that's good. So you're giving away all this information to different people, and I guess we all appreciate
Thank,
that. People, we need more people like you guys in this
thank
world.
you because you are such a powerful person with wisdom and insight, and we are glad to have you. So yeah, that is it for today's episode of the Smart Money Show, where every conversation is a step closer to financial freedom. Remember, it is not about working harder, but it's about working smarter with your time, strategy, and your money. Until next time, stay sharp, stay invested, and stay smart. Hit that subscribe button and tap the notification bell. You will never miss any moment at Wealth Trade Hub. So, cheers. Bye.